Welcome to Tradespoon. My name is Vlad Karpel. I'm CEO and founder of Tradespoon, and today we're going to have strategy roundtable discussion. This is a live session where we talk about Tradespoon tools, current market conditions, answering any questions you might have about membership, and any other questions that you have. For those of you who are new, if this is your first live event, do me a favor, just type in first. Always want to welcome new Tradespoon subscribers. This is my brief bio as Executive Vice President and Head of Technology at Options Express from its inception through 2007. Options Express was an online broker-dealer acquired by Charles Schwab in 2011. At some point, the company was worth over $2 billion, so I'm very proud of that experience. Since I left Options Express, I work as a consultant and investor in several financial technology firms here in Chicago. I want to take this opportunity to say thank you to all the Tradespoon subscribers. Because of you, I'm able to do what I enjoy professionally, managing and trading my own money. I've been doing that for over 15 years, mentoring and teaching Tradespoon subscribers how to trade stock and options. And finally, I have a master's degree in computer science, specializing in technology and big data. Very important to look at the disclosures. Trading stock and options involve risk and are not suitable for everyone. You must be aware of the risks and be willing to accept them in order to invest in current market conditions. I'm not a financial advisor. I'm not registered with FINRA nor SEC. I'm showing you what I do in my own portfolio based on my own risk tolerance level for general education information purposes only. Please consult your financial advisor prior to making any trading decisions. Also, should not be assumed that the future trade picks will be profitable or will equal past performance. And you can see the relationship between Tradespoon and Trading Block on the bottom of your screen. All right, so before we talk about trading system, let's recap current market conditions and where we think the market is heading. Let me pull up Angelique. Hello again. We meet again. All right, so let's look at current market conditions. So spiders, right? We're looking at the spiders. In terms of stock forecast toolbox, looking at the spiders, we're seeing basically market is taking a pause. We're towards the end of the earnings season. Maybe 75% of S&P 500 stocks announce earnings. We are currently sitting right below the all-time high, around 294, 295 level. Model for the next 10 days basically doesn't have a lot of conviction. If you look, very small momentum for today, neutral momentum for the next 10 days. So market is looking for direction. We had a pullback after our FOMC decision on Wednesday. We breached 290 level for maybe just a few moments and closed above that level, so that's good. Usually, as long as the stock is trading within the range, or ETF is trading within the range, predicted low and high range, then the trend will continue. And currently, we're seeing fluctuation between 288 and 290 as of right now. Again, some of the macroeconomic events such as US-China negotiations on the tariffs, that might potentially lead the market to the upside or to the downside. But we are approaching May, end of the May, right? There's a couple of weeks left, 4 weeks left, 3 weeks left in May, and 3-4 weeks left in May, and then we're approaching the summer, which is from the seasonality point of view. Now let's look at the different model. We're looking at the seasonal chart. Also very neutral prediction. This model ran on Sunday, basically said, looking into the next 50 days. Now we're looking towards the end of June. Looking to the end of June, we have mixed signals. Out of 4 independent predictions, 2 are lower and 2 are higher. TJ, sell in May and go away. That's also one of the ideas. Marvin, good morning. No audio. Let me know if you guys can hear me. I just want to make sure. Maybe try phone line. Okay, so most people can hear me. So 2 out of 4 predictions are higher, 95% correlation. I haven't seen 95% correlation in quite some time. That means that the market is actually, in the past couple months, trading exactly how it's been trading in historically. So 1-to-1 correlation. So you can see February, March, April, usually we make year-to-date high which we obviously have. And then starting May, we're trading in a range all the way up until October. So that means that probably you need to be cautious. Idea, best strategy is probably buy on the dips. We've seen the support around, if you look at the spiders, strong support. We reached 289. I think between 284 and 288 is a strong support, right? That's the 50-day moving average. We haven't touched 15-day moving average since the sell-off in November and December, right? That's the last time we broke through the 50-day moving average was October, November. So it's been a few months. So I think now, again, some news has to happen in order for the market to breach 50-day moving average. I'm not sure what that news is, or I'm not sure the day that the news is going to come. But up until that news comes, the 50-day moving average is your strong support for the market. And ideally, you want to buy on the dips and always have cash available if the market sells off. In terms of the rest of the market, let's look at some of the indexes I usually follow. Financial REITs are sold off, right, on the news that potentially with the next president, we will have free healthcare for everybody. That negatively affect healthcare sector. Again, this is a temporary. You can see that the sectors, a lot of the sectors are overbought. Any type of news, you will have short-term correction, but for the most part, it has recovered nicely and actually almost touched the 52-week high. So that's the financial REITs sorry, this is financial REITs and the healthcare. Healthcare sold off similarly. It's not at all, healthcare is not at all-time high, but trades right below 50-day moving average and still vulnerable for the continued sell-off. But for the most part, after the announcement, has recovered most of its losses. We see gold continued sell-off in downward momentum. I think gold is oversold. Gold miners are oversold. This is sectors where you can potentially consider as a hedge. And gold miners have been in strong momentum since September. And in case market sells off, I think people will gravitate over the gold mining stocks. Emerging market, Germany, continued movement to the upside. Those sectors, emerging market, Germany, China has been leading the market. Euro, strong US dollar. US dollar is continues march to the upside. At some point, that will have a negative effect on conglomerates and industrial sectors. We've talked about a lot of, previous week we talked about marijuana stocks and alternative harvest. This is probably a sector that gets the most publicity. So we're also following, we put on, I think, GWPH. This is not in any of our paid portfolio. This is just an example of a trade idea I put last Friday. Just, if you are trading the stock sector, this is probably one of the strongest sector. Had a nice rally, right? About, almost 10% rally since last week, 3.5, it was around 164. So $10, so maybe not, maybe 8% rally. So it's trading in a strong momentum, GWPH. So marijuana stocks continue its movement to the upside. And in terms of 5G stocks, we followed Cisco. It's announcing their earnings. It's sold off prior to there's 10 days to the earnings, so I would be careful with the Cisco. Verizon is another stocks that can benefit from the 5G sector. Also kind of pull back. You can see even if the stocks are covered in news a lot, that doesn't mean that they're going to infinitely go into the upside. They've been leading the market, but you can see some of the 5G stocks like Cisco, Verizon, Broadcom, semiconductors, they're still at all-session high. So that's in terms of the sectors. This is where we see the market going for the next 50 days. I think kind of a sideways trading range. How do you trade in current market conditions? We have two different trading systems. We have a short-term trading system and long-term trading system. So today I'm going to cover examples from our day trading using active trader service. So if you're doing day trading, I encourage you to participate in live trading room and in the active trader. So I'm going to cover the short-term trading, and I do encourage you to enter all of the questions. I will try to answer all of them back. By the end of the session, I'll try to answer all of the questions. So short-term trading, why do I like short-term trading? It shows you small price fluctuations, very easy to learn. If you're new to options or you're new to trading, day trading is a great way to learn. Obviously, you have to have the right personality to day trade, so it's not for everybody. But in terms of education, you can see the cycle of the trades. It's a very short period of time, and you can learn quickly about trading. Then you need to get comfortable and decide on a spectrum of risk taking. You know, are you risk averse? Are you risk taker? Then it will help you decide whether you want to take long-term trades or shorter-term trades. Shorter-term trades, you usually have to be, have more aggressive personality, more risk-taking personality, and be able to make decisions in a very short period of time, usually the split seconds or at least in a few minutes intervals. The second half of the presentation, I'm going to talk about long-term trading. We have members that trade short-term trades. We have members that do only long-term trades. We have members that do both. For longer-term trading, I'm going to cover monthly trader. This is our picks services. So monthly trader and weekly trader, this is where you can get picks. And also live trading room. Live trading room, we have morning session and closing bell session. This is where you can actually participate in a live trading room environment, and then I will cover the portfolios. We have 3 portfolios that I'm managing. One is a stock portfolio, that's robo-investing. One is the premium service. This is where I trade option spreads. And then live trading room. This is where I trade all 3 picks: daily active trader, monthly trader, and weekly trader. But it doesn't matter whether you're a short-term trader or a long-term trader, the idea is that you have to have a trading plan. Very important to have a trading plan, not only to have a trading plan, but trade the trading plan, right? You can write down the trading plan, but if you don't follow the trading plan, that can create an issue. That takes experience, right? That takes time. You can learn it overnight, so you have to be patient. You have to invest into education. We do have one-on-one coaching program, especially for those of you who are new, or even if you're experienced, but you are not always following your trading plan, or you want to adjust your trading plan. I encourage you to participate in our one-on-one coaching program. But trading psychology is very important. If you are participating in our live trading room, before market opens, I always talk about emotional intelligence. I encourage everybody to read books on emotional intelligence. I spent past year reading a lot of literature and a lot of research on emotional intelligence and how much it affects traders. So being self-aware and know why you get into trades is very important. You want to avoid trading when you don't have enough sleep. You want to avoid trading when you lost money, you're trying to do a revenge trade. You want to avoid trading if you want to prove to yourself that you can trade. So you don't want to trade for the wrong reasons. You want to trade based on the signals and based on statistics. You want to see what is the probability of stock being at a certain price level, and then you follow your trading plan in terms of risk versus reward. You look at the signal, you look what your risk versus reward setup, what is your maximum loss, maximum gain, and then you set the goals. How often do you want to be right? Do you want to be right 75% of the time? Great. So if 3 out of 4 trades you want to be correct, that's my trading plan. Then my goal is to make sure that one losing trade out of the 4, the total dollar amount will not exceed the 3 winning trades. And you can adjust that goal. Some people have 50-50. Some people want to have home runs. So instead of looking for 0.5% profit, maybe they're looking for, in day trading, they want the stock to move 5%. All of these goals are reasonable as long as they make sense over a long period of time. And that, I would say, are the key steps in becoming a successful trader. After the trading plan, obviously very important to know what asset classes you are trading. You have to be familiar with them, whether you trade in futures, stock, options, forex, bitcoins. Doesn't matter what you trade in, the same methodology, the same approach to trading applies. It's not whether you doing futures trading or you're doing stock trading, your trading plan, how you become more successful trader, it's almost identical. The only difference is time horizon and volatility. Bitcoin will be more volatile than spiders, right? And futures on mini S&P will give you a lot more leverage than regular spiders ETF. You need to have time outlook based on direction that you have. You know, are we approaching summer? Will the stock market trade in the range, or will it go up 10%? Will it go down 10%? You need to have an outlook on the market. Learn how to manage position entry and exit. And the most important, not most important, but one of the most important concepts is portfolio allocation, right? You always want to have 30% of your portfolio in cash. You don't know when the market is going to sell off. I think market is overbought. I think sometime between now and potentially December, there will be a correction, and it could be as high as, you know, we might reach the same lows, or even market can go lower than previous lows that we've seen in November and December. I think by the end of the year, we'll see the lows again. Just nobody can tell you, will it happen on October 1st or will it happen on July 2nd? You know, there's got to be some news that will move that market, you know, will retest the market to the downside. So having right portfolio allocation, make sure that you have cash. Those are the only tools that you have at your disposal that can help you deal with market volatility. So again, just to recap, second half of the presentation, I'm going to talk about longer term trading, talk about our option examples, how to use delta theta, how to reduce your cost basis, how to set up stocks with high probability of success, look at the support and resistance levels, timing of entries and exits. Those are some of the goals. And again, very important to have a trading plan. So this is a day trading plan. You can find these on, if you go to our learning center, smart trading guides, then you can find the short-term trading plan that we execute and the long-term trading plan. So short-term trading plan I execute in the live trading room. So an active trader in the live trading room, you can go in and see 3 bullish pick, CL, LRCX, IR. And 3 bearish pick, AT&T, Google, and GLW. So today in the live trading room, I actually traded AT&T. You can see if you type in AT&T today, the idea is that you buy at the predicted high. So if you look at the AT&T, if I type in AT&T, the predicted high is $30.78. This is where the entry point came. So you either wait for the predicted high or you trade at yesterday's session high, right? If the market gapped up, then potentially you wait for yesterday's session high. Sorry, I'm looking at the entry one. So either at the predicted high, $30.78, or you do at the close price, $30.62. I actually waited for the predicted high. So in the predicted high, if you actually see, I was able to trade 31 put for 28 cents. I was able to enter for 28 cents and close it for 37 cents. It's actually trading at 37 cents. I was able to capture 9 cents. Usually it's a 0.5% of the stock, 15 cents on the stock. Options is 10, 11 cents. So that's an example how you would trade active trader. You can actually see it. I enter them in manage portfolio. And if you look at the AT&T, you can actually see $30.78 is the predicted high. 31.01 is yesterday's high. And right now it's trading right in the middle of the range, $30.64. And you do see support here. This is the yesterday's low, $30.59. This is the prior low. So if you look at the stable description, this is the prior low. So this is an example of how you would do a short-term trade. Again, if you're new, I would encourage you to go to Active Trader, look at these stocks, AT&T, GLW, Google. All of them were on the list for today's live trading. I'm looking at QQQ. QQQ is also right at the predicted high, 189.78, currently trading 190.36. So about 10 basis, 15 basis points from the predicted high. So if you look at the active trader, GLW, entry one, it makes sense to either enter the 31.99, yesterday's the close price, or at at predicted high, sorry, or at yesterday's close price. So GLW, same thing. I went to GLW. Looked at predicted high was $31.99, so I went in and actually executed the option trade using GLW. I bought the option at 63 cents. Again, GLW 32.5 put, deep in the money put for 63 cents. That means I'm buying the stock at $31.90. Common question was, how do you calculate these price levels? Well, I want to trade at intrinsic value. If I'm bearish, I'm buying a put. 32.5, I take the difference between the stock price and the stock price. I want to buy it at 31.90, right? That's the predicted high. So 31.90 minus 32.5, that's how I got it to 63 cents, 60 cents. So at that level, at the intrinsic value, it makes sense to buy at 63 cents. Then you can sell the position at 73 cents. I actually have an order, the second half of the order to close at 83 cents. It's trading around 77 cents. So this is how you would do the active trader model. Now turning our attention to monthly trader model. In similar fashion, you go to weekly trader. Let's talk about weekly trader. So if you want to do weekly trader, you go to the weekly trader model, you pick details, you look at the stocks. You have, again, 3 bullish, IWM, you have Visa, you have SYK, you have a bearish trades. We didn't have any bearish trades. I think last week we had Costco. So let's go over Costco example. Same thing. You have a choice. You either enter at predicted low, 244.76, or at Monday's open, $245. Currently it's trading at 243. I'm actually in Costco position. So what I did here, let's look at Costco position. This is a weekly trader. I decided to give myself a little bit more room in case market does sell off. So I bought 235, 240 call, and I'm using weekly options for the weekly model. I'm using weekly options. You can if you want, you can do the first week of the front months, the front weekly options that expires the soonest. In this case, I decided to give myself a little bit more room. The market is overbought. We've had correction. So I bought it at $3.80, but I'm able to reduce the cost basis. So you notice that for day trading, I'm using single options. But for longer term models, whether it's a weekly trader or monthly trader, then I'm using spreads. I want to take advantage of the time decay. Costco is trading right now at 243 level. My break even is 235 plus 380 is 238.80. So as long as Costco trades, as long as Costco is trading above let's go back, 238 level. As long as the Costco stays above 238 level, then this trade would be profitable. And I'm just waiting for the time decay. Right? I see strong support at 240, it rally. So right now, I'm looking to exit the position at $4.60. Currently trading about $4.10, $4.20. So this is an example of the weekly model. You go to the weekly trader signals. We have Costco, we have MasterCard. You buy either at the predicted low or the next day. In these both cases, you would be in the position right now, and you trade spreads. You can buy at the money options, or you can buy deeper in the money options to give yourself a little bit more room. And then as long as the stock trades above these levels, then this would be a profitable trade. So this is an example of the weekly trader model. And again, I encourage you to look at the trading plan that we're following. This is part of the Learning Center. And I encourage you to participate in live trading room. If you don't have time to participate in live trading room, this is where I review these trades. They're all being recorded. So all of our events are recorded in live event recordings. This is a strategy roundtable. Again, you want to invest into education. I tend to go quickly. We have a lot of services, a lot of choices to have. So review several of these weekly strategy roundtable that will help you kind of internalize this information. In order to internalize information, it takes repetition. And then look at the trading room recordings, right? Look at our trading room recordings, because this is a good example where you can actually see example of these trades. So next, let's turn our attention to monthly trader. How many of you are actually a monthly trader? How many of you holding position, 2 weeks, 4 weeks, 8 weeks? Let me know how many of you guys do that. All right, Al, John, Kim. All right, we have few people. There's in terms of books on emotional intelligence, I don't have it in front of me, but there's a book called Emotional Intelligence that if you open up a support ticket, I'll answer it, but there's an emotional intelligence book that you can actually read that is very a good read. So monthly trader. So let's talk about monthly trader. You go again under quick navigation, monthly trader. Let's go last week. Let's see if I did any trades. Okay, Broadcom. So you see Broadcom, again, you have a choice. You either enter at 316 or 318. You wait for the predicted low, or you do it on Monday when the signal is generated. That is your choice. In this example, in both cases, you would be in the position right now. But this is signal published on April 22nd. Again, it's a long-term model. I'm looking into June expiration. So let's see what happened to this trade. IVGO. I'm actually, full disclosure, still in this trade. I was able to enter the trade at $7.40. Currently, it's trading at the same level. It's a June expiration. Again, I'm looking for cost basis reduction. If you look at the Broadcom, similar to Casco, it's trading right now at 313. But my cost basis is 290 plus 740. My cost basis is 297. So as long as the stock is trading above 297 level, I'm taking advantage of the time decay, right? And in terms of cost basis reduction, this is $7, right? 297 minus 313, this is $7 below the market value. So I'm able to, because of the high beta semiconductor stocks, I'm able to reduce my cost basis roughly by 2%. So that's the idea of options. They're able to, A, give you leverage on your money, but B, they're able to buy stocks at the discount, right? And everybody wants to buy stocks at the discount. Not only this feels good, but also in terms of probabilities, right? The lower the cost basis, the higher the likelihood. If I buy stock at 313 and I wait 15 days, or I buy stock at 297, well, guess what is the winning percentage will be if I trade stock versus spreads versus options. The lower my cost basis, the higher probability that my trade will go in my direction, right? So in general, buying option spreads will outweigh, instead from statistical point of view, outweigh options. Naked puts will outweigh the spreads, but we don't, unless you have a large portfolio, you can afford to own the stock, so then you don't trade short puts. But in general, in terms of statistics, the lower your cost basis, the higher probability that the higher percentage of your winning trades will be. So this is, again, monthly trader. Signal gets published every week. We have 3 bullish, 3 bearish. When the signal gets published, you have choice of entry 1, entry 2. Some actually says, Vlad, I only want to trade, entry 2. There's nothing wrong with that strategy. If you waited in this case, example, for 308, right, and you only do an entry 2, well, guess what happened in this case? Well, you will be actually up, right? If you waited for 308, it actually went, it went 308 on April 26th. You would enter the position, and on May 1st, it would be at 322. So you would have a $14 profit at this point, almost 5% profit. What's the downside of waiting entry 2? Well, they don't always happen, right? Like for Honeywell, if you waited for entry 2, 162, April 22nd, well, 162 never reached that level, right? It gapped up after earnings, so 167. So if you entered 167, you would be up as high as $5, 3% up on Honeywell. But if you waited for entry 2, it would never happen. You would never be in a position. So the reason we're giving you strategy A and strategy B, it depends again where you are on the spectrum of risk aversion. If you're a risk taker, or if you have a lot of cash and you want to put cash into use, well, then you use entry 1, and you just, the signal gets generated on Sunday. On Monday, you get into the trade, or you wait for a small pullback. If you're more risk averse and you're looking for very high percentage of winning trades, then you just always wait for entry 2. You will find that you will have a lot less trades, but your winning rate will be much higher. So again, it all depends on where you are on spectrum of risk aversion and how much cash you have in your portfolio to deploy. So that's an example of the monthly trader. Any questions? Let's go over the questions. Jim, in terms of overbought, oversold, so the question is, how do you know if something is overbought, oversold? Actually, in the managed portfolio, we created this. I created these 2 sliding scales. So let's say for GLW, the reason I entered the trade at 31.99 because this was a bearish trade. It reached 31.99. It's overbought. So every time we reach a predicted high, it's considered to be overbought. Every time market reaches low, it's oversold. Same thing goes for market. Right now, QQQ is 190.74. We predicted 189.78. It's overbought, right? Based on our predicted high. So this is overbought, oversold on day trading scale. On the longer term trading, the question then, well, how do you know if something over long term overbought, oversold? You go, same idea. You go to research. You type in spiders, right? If you want to see what is support and resistance for spiders, the model predicted the low for the next 10 days to be 287, overhead resistance to be 295.76. Well, guess what happened when the stock reached 294.95? It actually sold off and was as low as 289. So these are your support and resistance levels, and this doesn't change, right? This is only changed once on Sunday. These are visual cues to tell you, well, if the market reaches 288, guess what? It's oversold. If you have cash, you probably want to start thinking about deploying some of your cash for your long-term positions. If market reaches 295, market is overbought. If you buy on margin, this is where you want to start thinking about raising cash. So it's a great question. This is how you know if the stock is overbought or if the stock oversold on the long-term or short-term trading. If you have today, I think Fortinet announced earnings, right? This was one of the questions on the live trading room. So you look at Fortinet. How do you know if it's oversold? It's trading at 86. Model actually predicted 86, but this is earnings event, right? So actually, model did a good job predicting that 86 is a support, but Fortinet missed the earnings, and potentially in the next 10 days, it will trade lower, especially if the market sells off. So this is how you know what the support and resistance levels are. But this is just, they have certain probability of holding true, right? So 75%, 85% of the time, the stock will trade in this range for the next 10 days. But if there is some event, like FOMC decision for the financial sector or earnings on the Fortinet, then the stock will trade outside of this range. Cecile, what are the names of 5G stocks? 5G stocks, broad any of the semiconductors, Broadcom, AMAT. So these are stocks that have exposure to 5G stocks, semiconductors, Cisco, infrastructure, networking equipment, Cisco, Verizon, telecommunication company. All of these companies will benefit from the conversion to 5G infrastructures. So telecommunications, semiconductors, networking infrastructure, switches, firewalls, etc. Ericsson's of the world. So Cecile, thank you for the question. Bruce had a good question. He got into Amazon based on the model, into a trade. Amazon had strong earnings, actually, almost at 52-week high. So the question is, and I assume this is June contract, which model should I follow? Should I follow the short-term model, right? And look at Amazon. It's a very common question. And it points to slightly to the downside. So do I rely on Amazon on the short-term model, or do I rely on the long-term model? Which one is accurate? Well, the answer is they both can be accurate, or they both can be inaccurate. So the longer-term model basically says 87% correlation on Amazon, 4 out of 4 or higher, very strong signal for Amazon, right? 4 out of 4, when you see 4 out of 4 predictions are higher on Amazon trade, and you see 87% correlation, that basically says 2 independent models. The seasonality shows that usually Amazon in May and June continues to go higher. And our proprietary model on Sunday said that very strong signal, 80% accuracy. So with an 80% accuracy, or even slightly higher, that the stock is going to continue going higher. But short-term is actually says that Amazon is down. So which one is right? Well, they're both right? Well, Amazon short-term did sell off when we had a sell-off in the market, and now it kind of rebounded back. So it all depends on your time horizon. If you're doing day trading, or you're holding position for a couple of days, then 10-day model is more important, right? If you're holding Amazon for 2 days, it doesn't matter what the long-term model says, because this is a time outlook for the next 40 days, 50 days. More important is to look at 10-day prediction if you're doing day trading. If you're doing long-term trading, like June contract, well, you have 2 months, almost 2 months until the expiration. Then you look at the 6 months. 6 months model shows you actually downtrend for the Amazon. This is because data gets updated only once a month, so it's not taking into consideration this earnings event, right? So it doesn't take into consideration earnings event. But the longer term model, the seasonal chart, actually shows 4 out of 4 predictions are higher. So that's so then for the longer term model, if you're holding position 6 months, I would rely on seasonal chart. That's how I make decisions to get into weekly trader and monthly trader. For day trading, I rely on the stock forecast toolbox. Ideally, you want both of them to align, but sometimes they will not, right? Like you see it here. Sometimes they will not, then one has more weight than the other. John, LRCX. Let's look at LRCX. So LRCX was one of the day trading. So let's look at the position. We actually traded this today. Let's see, LRCX. So this is part of the live trading room. Let's see today. So I was able to get in at $2.60. Right now it's trading at $3. So I'm able to capture 40 cents. So 20 basis points. So maybe it did sell off. At this point, it did sell off to as low as $6.75. So maybe I would close half of the position now. Close half of the position, $3, was able to capture 40 cents. Then let the rest of the position wait if it reaches 360. So another 60 cents. So it could, retrace back to the high, right? So let's look at QQQ. QQQs, but also overbought. So at this point, I would probably close half of the position. Now, let me just do this. Since I'm in this position, I don't want to. So I did close. So GLW, I closed the second half of the position. Let's close half of the position. And LRCX. So it is a highly volatile stock, so you don't want to be overly exposed. And then let me close this for $3, half of the position. So I was able to capture 40 cents. That's about 20 basis points. and then I'm gonna capture put the second half to close at 3,040 cents. In terms of stop levels, again, 1%. So let's look at LRCX. Or today's open price, right? We said today's open price should be the strong support. It opened up at 207.39, gapped up as low as 206.68. So 206.17 is a support. So I would exit right below that today's low, right? Today's low is what? 206.17 is the low. So 206.17 or actually 206.59. You know, it is selling off. So let's see. 270, 280, 40. Oh, okay, so I'll just wait. I'm gonna chase this. All right. So that's your target gain and stop loss on LRCX. Thank you for the question. Let's continue on. Sergey, how to start trading your plan? The place to start is Learning Center, Smart Trading Guides. I would look at the short-term trading plan, long-term trading plan. I would read these manuals. This is a trading plan that we execute using our services and models with specific entry and exit levels. So that's where I would start. If you need help customizing it, then I would encourage you to consider the one-on-one coaching. I know you're actually in one-on-one coaching. So if you're not in one-on-one coaching, you need help with adjusting trading plan, or you want to learn certain concepts, that I encourage you to fill out this one-on-one coaching application. Book on emotional intelligence. Let's see, emotional. Let's see. This Daniel Coleman. So Daniel Coleman, Emotional Intelligence. It's a great book. Whether you're a trader or not trader, I think that will actually help you understand. I mean, this is kind of a classic book, and it's kind of very new research that actually started. Now that we can do brain images of the brains, then there's a lot of studies in psychology that shows, you know, how much your amygdala makes decision, how much your frontal cortex makes decision. You know, up until the last 20 years, there was an impression that, you know, there's no, when we make decisions, it's all cognitive, it's all, you know, frontal cortex decisions. But in reality, now the research has just shifted that when we do make decisions, especially in the, you know, what's the right word? Not highly stressed environment, but if your job where you have to make important decisions, you have to make them quickly, it does create a certain level of stress. So just as much, your frontal cortex makes just as much a decision as your, you know, your amygdala of your brain. So in both, they work together, and the decision is made together. And the only way you know, are you making rational decisions, are you making emotional decisions, or are you making intelligent decision, is self-awareness. So this book talks a lot about the emotional intelligence, and this is kind of, you know, kind of a classic, the founding father of, you know, emotional intelligence. Okay, let me see. All right, thank you for the question. Cam, in terms of, the other question was auto execute service. So if you have a full-time job and you want somebody else to place these trades, then we do have premium portfolio. We only execute premium portfolio and robo investor. Those are the only two choices. It's only done with the trading block. The way you can find out more information, you go to platform. Sorry about that. You go to platform, you select third-party integrations, and you go to trading block, right? Learn more. So you have pretty reasonable, pretty competitive commission rates, and you can open up an account. And once you open up an account, right? Once you open up an account here, then you send them an email. Just basically says, "Hey, I'm a Tradespoon subscriber. Here's my, I want to participate in the auto execute service," and that's the process. So this is the email. This is the link, and you can find it under platform. Thank you for the question. Coleman, did I pick the right one? Yeah, Daniel Coleman. Okay, so Angelique and I think alike. Dennis, yeah, I looked example of monthly trader. It doesn't matter if it's this week or last week. All right, much appreciation. We talked about LRCX. Okay, so LRCX, we're still waiting. Jerry, we talked about emotional intelligence. IW does the RTI. TJ had a question about RTI versus IWM. In terms of stock forecast toolbox, the higher the liquidity, the more historical data, the more accurate prediction. So if I have to choose between IWM, which is Russell 2000 that everybody trades, versus the RTY, sometimes you will see discrepancies, right, on the futures. Sometimes you will see the discrepancies. I always rely on the ETF. Keep in mind that they trade in high correlation to each other, right? So the support level on the if IWM reaches 155.23, well, guess what? The futures will also reach similar level, and they would consider to be oversold. So thank you for the question. Qualcomm, yes, Qualcomm is one of the, that's the one I wanted to talk about, is the, Qualcomm was the one for the part of the 5G stocks. Don had a question on the call vertical spread. Should you sell it when the price of the underlying gets close to the option price you sold on the vertical? Don, I'm not sure what exactly you mean. Should you sell the price? So if you can just explain what that question means, I'll be happy to answer it. Cecile, pot stocks, usually we cover MJ. This is the ETF, will not give you risk to the, you can see pot stocks taking a pause, but this is where it was taken without taking the risk of individual stock names. Angelique, GLL, you're right. John, thank you. Angelique, thank you. Sergey, thank you. Let me see. John, they do look at the left brain and right brain. I think the author talks about left brain and right brain, but more so the I think there's, at least right now, the consensus is that your emotional intelligence and your cognitive intelligence are working together. Where 20 years they thought that this is completely different areas of decision, different areas of the brain makes different types of decision. Where right now, especially in trading psychology of the world, and you can probably look, if you have enough experience, you know that sometimes you make decisions and you know exactly what you're doing, but sometimes you do these revenge trades, or you look at LRCX and you're like, well, if I just waited, I entered at, I think I entered at 207.20. What if I just waited 50 cents more? And and you start feeling, like you're upset about yourself, like you could have predicted 206. But in reality, nobody knows whether it's 207 or 206.77 or it's 205, right? It's an experiment. You have the model that tells you that the trend will be higher today, and then open price is a reasonable level. The open price or yesterday's close is a reasonable level to enter, right? So you enter at 207 and actually reach the 208, then this would be a good trade. But you cannot be upset that well, if I just waited longer, it would have entered the 2. But we all go through this emotional conversations with ourselves, right? If I only get out of 208 and now it's at 207 and 48, in reality, you don't know exactly where the levels are. So most important is to be self-aware that you're experiencing these emotions and then you go back to your trading plan, and you basically say, well, I can't really know exactly where the stock is gonna trade. All I know is that on average, the prices for today should be higher than yesterday. That I know. I know, I can look at LRCX, right? It is showing me 63, it shows me that today it's up day, and the predicted low is 203.49, and the open price is 206.84. So I know previous low is 206.84. I know this is my support level. So 206.84, if it drops below, I should exit the position. If it reaches 207, this is a good time to enter the position. Yeah, so we talked about trading block account, right? So that's under platform. This is your instructions how to open the account. Chris, thank you for kind words. Yeah, so for Jim, for auto execute service, the broker gets all of the emails and SMS message. Every time I trade in robo-investing or premium service, everybody gets email and SMS message. For day trading, only if you're part of the elite circle do you get SMS and emails and trader log. So if you're an elite, you see all the trades I'm making along with SMS message. But for portfolio management, only robo-investor, only the premium and the robo-investor gets email and SMS. Every time I trade, along with the auto execute, with the broker dealer. If you're trading block user, in order to, if you have a trading block account, you got to go to the login. You should see a login screen, and you should agree to API agreement. So you first have to agree to an API agreement, then you click on login again, and then you enter your trading block user ID and password. After you do that, and this account is selected, you can actually see your open orders at trading block. Then you can actually go in and be able to see these updated quotes. So only if you have if you don't have trading block account, you'll see static quotes, right? Delayed quotes, 15 minutes delay. But if you have a trading block account, you have real-time quotes. When do I close vertical spread? So Don, thank you for the question. So let's say Costco, right? This is one of the verticals that I'm managing. There's two scenarios. If Costco jumps to 460, I would close this trade, right? Or if Costco drops to, usually it's 50%. On the longer term trading, whether you trade in options or a spread, the general rule, you don't want to lose 50% of the value of the option. So if it drops to $1.90, $1.80, I would consider this is where the levels I would close the position. I mean, you want to look at the support, right? But for Costco to drop to $1.80, most likely it has to breach the I would say 240, maybe even 236 level. So if it breaches 240, if it drops below, like makes a sudden move below 50-day moving average, then I'm going to exit the position, right? If I see it at 50% and it's right at 240 and I see strong support at 240, then I might be a little bit more patient. But if I don't see support, if we break 240, 236, we break below 50-day moving average, let's say very quickly, then that's when I would exit the position. But in general, you don't want to lose, your goal not to lose more than 50% of the value of the option. TJ, are debit spreads more flexible than the credit spread? Very common question. There's a lot of, services, or there's a lot of information about, credit spreads. And in reality, if I'm buying 235, 240 debit spreads for $3.80, I can sell 240 put and buy 235 put for $1.20, right? They should trade in parity. Forget the volatility skew for a moment, but they should trade in parity. So in reality, debit spreads and credit spreads if you're choosing the same strike prices are identical. So that's first of all. Second of all, sometimes when volatility drops suddenly, credit spreads are more preferable. The reason I do like to do debit spreads, and especially in low volatility environment, right? You look at the VIX. One of the things I forgot to look is VIX is all-time low, right? We're in the time of complacency. Everybody's complacent. Everybody forgot about what happened in November, December. Everybody's happy. This is kind of a contrarian signal where you want to start. You want to be at least self-aware of your complacency and make sure that you don't get caught in this when this volatility will spike. But in the low volatility environment, when everybody is complacent, you want to buy debit spread because, let's say, Costco does drop. We have another interest rate decision. Costco drop quickly. I can go in and actually close the short leg, right? If it's worthless or almost worthless, I can close the short leg and try to get out of this trade by seeing when the stock reverts to its mean. If I do credit put spread, I can't do it, right? I cannot close my long leg and be left with the short leg. I don't have enough money to cover this short put position, or there's just too much risk to have a short put. So that's why I prefer to do debit spreads. Marvin, thank you very much. How do you price, Sergey, I don't understand. How do you find price reflection between stock price and option price? So for like day trading, like if you look for today, GLW. Well, GLW, let's do AT&T. So for AT&T, if you want to know how to determine the option price, you take the strike price and you subtract where the stock is trading. So AT&T right now is trading at $30.63. So if AT&T is trading at $30.63, I take the in the money put, right? In the money, so it has to be higher price. So 31 minus 30.64, the option should trade at 37 cents. So it trades exactly at 37 cents. So it means it's a weekly options. There's only a couple hours left till expiration. That's the ideal price. If I'm buying it at 39 cents and it's right now at 36 cents, well, I'm paying 3 cents extra, right? So there's 3 cents of extrinsic value. Market makers also have to make money. So that's how you know what the option price should be. Dennis, I'm not sure what the minimum amount at Trading Block to get the real-time quotes. It might be, I think somebody said $50. I would find out with Trading Block, but I think it's $50. And again, you don't have to trade it. You can close the account after you. So I think it is a minimum. It's like maybe $50, maybe $100. But this is something that sits in your account, and if you decide to trade, then great. If don't, then it's fine too. All right, that's all I have for today. It's 10:30. I think I answered most of your questions. Again, keep an eye on your stop levels. Read emotional intelligence books. Very important to invest into education and know more about yourself, and always be self-aware when you are trading. All right, thank you very much and have a great day. TJ, yes, I only do debit spreads in a low volatility environment. If you notice, all my trades right now are debit spreads, right? And one of the main reasons is this, right? When VXX is going to be at 50 or 40, then you'll see me do more credit spreads. But here, options are too cheap, right? They trade at parity, then why, there's no reason to sell, options. John, I don't think you can trade futures in Trading Block account. You can hold silver and gold as ETFs or stocks, but not. Okay. Sergey, thank you. Cam, thank you. John, thank you. Angelique, thank you. Physical metals, no, I don't think so. Fisher symbol, this is just another indicator that we're using to show you overbought and oversold. It's a regular indicator like moving average. Just type in Fisher. And you will see what Fisher transformer is. All right, guys, thank you very much. Have a great day. Enjoy your time with your family. And I hope to see everybody either today at the closing bell, if you're a lead subscriber, or tomorrow, not tomorrow, Monday at the morning session of Live Trading Room. Thank you very much. And again, always remember, invest into your education. Take care and have a great day.